Steve Sosnick here with today's Interactive Brokers midday market update for Friday, June 12th, 2020. Um, well, yesterday was an interesting one. When we talked about, when I joined you about this time yesterday, markets were down but not out. And the selling yesterday was really quite relentless. It's interesting because it had sort of an orderly tone to it, despite the obvious um, relentlessness of it. It almost seemed as though there were, I'm going to see programs, but institutional traders, institutional sellers who were working orders throughout the day because the market really never got a lift. We finally finished down around, called the 3,000 level on S&P, which is a pretty important level. It wasn't as important as it should have been on the way up because the market was just sort of in relentless rally mode. But you've got a couple of things there. First of all, markets do tend to gravitate around round numbers, 3,000 on S&P being a round number. Also, that's just about the 200-day moving average, and 200-day moving averages in general are used as support and resistance levels. So both of these don't surprise me that we stopped at that level yesterday. It doesn't surprise me that we bounced off the level this morning. It also, quite frankly, doesn't really surprise me that we're off the highs now. And as we're recording this, the S&Ps are up about 10, 11 points, having flirted with unchanged, also having been up about 70 at one point. When I spoke to someone after the close yesterday, I said, wouldn't surprise me at all if I saw the S&Ps up, call it 25 points or so, maybe a percent and a half, something of that nature. And that was originally where we were looking this morning. And the reasons, of course, for why I might have expected that bounce were we had been pretty much sold out. We were right at a support level. The internals yesterday were the sort of numbers that you see in what they call a capitulation move. Advanced declines declines severely outpaced advances. Down volume severely outpaced advances, up volume rather. And so that's the sort of thing you see when there's a bit of a selling climax. So it wouldn't surprise me that we would have seen a bounce this morning. But as with many things, these things get overdone. The bounce was too fast. There was no reason to be opening up to over 2% this morning. That was it was uncalled for in many ways. And so that was the kind of move that I've seen people have faded at this morning, and we'll see where it goes into the afternoon. It's really tough to get a sense of where people's risk tolerance is as we head into the weekend. I would think that after a move like yesterday's, people are not going to be super eager to go out really long. You do have an expiration week coming up. Strange things can happen there. There's big open positions that either need to be rolled or will expire. So that's going to have some effect. It's really tough to say what's going to happen going into the weekend. I don't have a strong sense at this point in the day for whether we're going to really put in a big test. Normally, I would say the support level should hold, and because it's a major level, and it's not going to go down without a fight. However, having ripped through this more or less without much resistance, support and resistance are very much interlinked on a technical basis. So if you had a lot of, if the 3,000 level and the 200-day moving average provided a lot of resistance on the way up, I would say it would be unquestionably able to provide a lot of support on the way down. It's not as clear to me now because of the nature of the move on the way up. At its most benign, yesterday was the kind of day where the market let out some steam. Yesterday's piece was entitled "Letting Out Some Air from the Balloon." I really didn't think there was as much air to be let out intraday as ended up happening, but markets had gotten ahead of themselves, and markets do tend to correct. It's an important lesson to keep in mind when you see things go parabolic, as we started to see in even some major indices, not only in individual stocks, but even the NDX index was starting to get a bit parabolic. That's when you start to see when that corrects, and it's never clear when a parabolic move ends. But when it does, it usually ends ugly, and yesterday was no exception. So let's see where things take us through the rest of the day and into next week. There's definitely going to be some pre-expiration hijinks, I'm going to say, at some point. There will be the likelihood of some moves. Let's see whether investors are willing to start to push things back up, or whether they're going to, or whether they continue to be risk averse. I guess they have the weekend, they have the rest of the day and the weekend to decide. Have a good one, everybody. We'll talk to you soon. Bye-bye.